we're going to be talking about something really important. It's not just security. We're really talking about scale. But what does scale even mean? I think we first need to figure out kind of where we are to define where we're going. So, Mike, why don't you kind of give us an indication on the maturation gradient? Where are we with crypto today?
Yeah, I mean, from a time perspective of how much has been developed, we're probably not nearly as far along as we think we are. The way that I try to benchmark this is based on users and usage, and then compare sort of the improvements of infrastructure such that we're able to compete with the kind of off-chain world. So in terms of usage, we're at about 100 million kind of monthly active across the biggest chains in terms of wallets. That puts us in like the late 90s for internet users. Not crazy amount of usage yet. Obviously, there's going to be a subsegment of the internet that was way more generalized. And then from a benchmarking perspective, we've improved quite a bit. So the initial phase of DeFi, when things kind of kicked off, was on Ethereum. Blocks were at 12 seconds. TPS was around 12. And we were first able to create these kind of cool but retro applications that had all kinds of design trade-offs based on this limited performance landscape.
Well, sure, of course, things couldn't be real-time at the time. And I want to get into some of those, I'm going to call them performance metrics from today in a little bit. But James, you know, your infrastructure, GCP, is running, at the end of the day, a lot of the nodes, the validators, it's core infrastructure, even storage. Even Waxman, of course, uses Google. We're very happy customers. But are you tracking with that around 100 million users worldwide of crypto? Does that sound about right?
It could sound about right. I mean, I'm always interested in like scratching the surface on facts to sort of understand, you know, people who are using Ethereum are probably using Solana, and people who are using Solana might be using Base. And so how many of them are truly unique? And you know, in the grand picture, as long as we're consistent with our measurement and we're seeing progress, I think we can say that things are growing. But whether we're at scale, I mean, that's a relative term. You know, when Google thinks about scale, it's certainly in big user numbers.
How many users does Google have?
How many users? I mean, we have a number of applications that have 1 billion plus users. You know, obviously more than one. But I think that doesn't have to be today's standard for crypto. We can go on an incremental journey as long as we're adding real value to both businesses and consumers and helping them scale to solve their business problems, then I think we're heading in the right direction. I think there's a long road to go. I mean, we're talking about platform economies at the end of the day, and they tend to have a habit of kind of others falling away, and they kind of end up with a few. And to my surprise, we're having proliferation of layer 1s still, certainly layer 2s. And that suggests to me we're still early in the scaling journey.
Sony, of course, is making its debut in the crypto world now. So then you're helping lead the initiative. Sony, of course, has so many different types of, I'm going to call them users, in so many different types of industries. Why enter the space now?
Yeah, I think technology is getting mature and mature and mature, right? And 3 years ago, the cost of the transaction takes $50 or $60. Then, you know, only limited people can use the Web3 and the blockchain at that time. But right now, thanks to multiple layer 2 or layer 1 and this kind of the technology, you know, scaling, sharding, and so on, right now the cost per transaction is even less than 1 cent. But we see thousands times improvement here in terms of tech, the cost. But we don't see thousands times adoption in a market. So it's because of the lack of the distribution channel. I think technology is almost ready, but we don't have enough distribution channel.
Okay, we're going to get into distribution in a minute, but you say the technology is almost ready. Mike, do you agree?
It's made a lot of progress. We're not quite at par, I think, with specifically in the finance use case of what you have off-chain. So current block time speeds are around 400 millisecond latencies for some of the fastest, all the way up to about 2 seconds on some of the super chains. On TradFi, For retail apps, you're looking at 500 milliseconds or less. For small institutions, about 300 milliseconds and less. For high institution or large institutions, you're 1 millisecond or less. 25 mics to
I was going to
match.
say, if you're an HFT firm,
25 mics in NYSE or NASDAQ's Colo. So we're nowhere near that level of scale or speed or adoption, but it has improved dramatically, right? So it's improved dramatically from 2020 when we were at 12-second block times to where we are today. But I think in order to really see that kind of last mile, we need to strip out costs. And so I know you mentioned how things have gotten much cheaper, but we still have a long way to go because the retail trading apps are like 0 commissions in TradFi.
So far, we've covered 2 major things in what is famously known as the blockchain trilemma. We've talked about speed, and that really means transaction speed. And we've talked about scale.
Yeah.
We haven't really touched on security. It seems pretty important. And again, what we, the people, have been hearing for many years is that you can go and get speed and you can get scale, but you can't get security, that you're compromising somewhere. James, is that true? Do you think that we have sufficient security for, I'm going to call them enterprise grade, but really it can mean maybe consumer grade's even higher standard. Are we there yet?
And the important thing is decentralization. Yeah.
Well, typically, right. It also requires some sort of decentralization, but specifically for security purposes. That is to say that you're not going to go and get 3 people in the UK to be compelled to hand over the private keys.
Yeah. So I think security is going to have different meanings across the stack. You've got security from a consensus algorithm standpoint and the number of validators that you have in your network. And I think the evidence would suggest the pure security element of blockchains is pretty robust. You look at Bitcoin, it's doing all right. Same for Ethereum. But if you look at hacks, hacks are happening at the smart contract levels. Hacks are still happening at the social engineering level. Some of the best lessons of Web 2 have not actually been transplanted into Web 3. People are still storing 2 of their 3 private keys on the same VM and getting socially engineered and then hacked. That's not a Web 3 problem. That's a human problem, and one that's going to follow us around as long as we're still human and the AI isn't acting on all of our behalves. So I think when we think about security, there's a lot that we can still learn from the existing way that we have been building technology for a long time, all the way through to the new approaches to security that are necessary to have consensus and then decentralization. And actually, I'd say we're doing a pretty good job on the latter. We haven't necessarily brought all the lessons from the former to bear yet.
I think you're right. That seems like the biggest issues we see when we hear about hacks nowadays, they're usually socially engineered in the first place. Rug pulls, again, this is not a crypto problem. It seems like it's a founder problem. Sony, of course, is entering this space from a consumer's perspective. Are you expecting the eventual end users of your protocol to really understand how private keys work, to understand how cold wallets work, or are you trying to develop or encourage an easier pathway for consumers to use crypto?
I think in the long run, people do not need to understand what Web3 is. And there will be no border between Web2 or Web3, because ordinary people does not use blockchain because it's Web3. They use blockchain because it's efficient, faster, cheaper, convenient, right? Then I think we are missing a pretty good UX and UI. One of the core reasons is pretty much fragmented products. There is no company. I think Coinbase is trying to do this, but there is a few company who is trying to provide vertically integrated service from blockchain layer, middleware, like RPC, indexer, and application. So right now, a lot of the people are making, a lot of the people see the industry horizontally. Ethereum is better than Solana, Solana is better than, other blockchain. People does not care.
Well, it's a very good point. So let's talk about what infrastructure means, because the layer ones, so it seems, are at least almost there. But Mike, what other infrastructure have we developed that you think is critical for at least financial services applications? Certainly Oracle's would be one of those things that are required for on-chain trading to work properly.
Yeah, I think that I focus a lot on the features and the benchmarks, because I think the sad reality of every new technological change is that the thing that the technology is famous for, in our case for blockchains, it'll be securities, that only really reaches scale adoption when every other feature is at parity with the predecessor. So I'll give you an example. When the internet came out, online shopping in the mid-90s, you basically were competing with a Sears catalog, which was like the Amazon of its day. You turn a page, 10 pictures loads in a second. On a dial-up, 56K dial-up modem.
Has anyone ever thought about a magazine that way, of the number of pictures that load per second? Something's wrong with you. Okay, go on.
I like it. I like it.
And so 56K modem, you load about 10 pictures at a time in about 2 minutes. And so it was very difficult to be able to convince your mom or grandma that there's all these benefits to having constant communication with the inventory that could be updated in real time with the fewer number of clicks, not having to do a mail order. The potential and savings on that workflow, it just wasn't there. Cut to 10 years later with a broadband modem, and you get 100x improvement. You can load 10 pictures in obviously like a second or so. Then we start to get into a point where things can really scale. And then beyond that, when you can load videos on Net-a-Porter of people wearing the clothes that you could never have imagined doing with a catalog, that really just kind of expands the space. So I think that you have to get to that bare minimum where everything else is even, and then people are thinking about the trade-off as being, of course I would take the application where I've got portability and security that's baked in, and I don't want to have to get into a scenario where I have to go into a branch office, or I get locked in, or my account gets locked out, or I can't move from one country to the next.
Yeah.
All of those benefits that have been heralded by our industry, but they're not something that everyone has to deal with every month. It's when you do have to deal with it, you say, well, why hasn't somebody fixed this? Of course you'll take it if it's at parity with everything else, but if you have some janky UX, or if the round-trip times are just not fast enough, and I know I'm harping on that, and it sounds like a very nuanced thing, but when Amazon focuses on their workflow, it's all about bringing down the latency, because it's just so much smoother.
Yeah, there's no question. I mean, we've seen that shopping carts simply get abandoned if it's just a little bit too annoying to go through an e-commerce site, right? Certainly at Google, you've been A/B testing this for quite a long time. But I actually do want to talk about some of this additional infrastructure, and so to mention RPCs. James, I know we typically don't shill here, but it was a pretty big announcement from Google yesterday. Why don't you tell us a little bit about kind of a new service that you're bringing out for the blockchain space?
Well, I think infrastructure in the Web3 space can benefit from more parties being involved. And Google Cloud owns a lot of private dark fiber, which when you add to the public internet, or any network for that matter, it's going to create more paths through the network and more redundancy, faster performance. And so one of the announcements we spoke about yesterday was just us contributing into the Web3 space by bringing to market free blockchain RPC endpoints for developers, Ethereum initially, and then Solana and Polygon following later this year. And it's 100 transactions per second for free, 1 million a day. And I think that's enough to serve a lot of the learning Web3 developer. And for us, it's about taking the millions of developers that are already on GCP, Google Cloud, and helping them start picking up Web3 technology, because a lot of developers are not going to ever be maxi one thing. They're going to solve a particular problem with the right technology at the right time. And so our job is to make all of that technology available for when they have the problem where it makes sense, and educate them on what those problems might look like. And so we're working really, really hard in that regard and with our partners to make sure that we're really well positioned to make sure our customers have the things they need.
Well, I'm glad that you're doing your best to go and encourage developers to enter this space and build things in crypto. It seems to me like one of the fundamental problems is we've got these great L1s, we've got these great L2s, and we've got very few applications that people actually use. Seems like it's a problem. Soda, your firm is, well, encouraging developers to build on your platform. How are you doing this today, and kind of what's the plan for encouraging actual usage on your new layer 2?
Yeah, so we are creating Sonium, which is the blockchain between Startel, which is my company, and Sony Group. And right now, I think a lot of the Web3 entrepreneurs started from solution, cutting-edge tech, and try to find a problem. But there is no problem, And for us,
You mean it's backwards, right?
Yeah, it should
they're
be-
finding a reason to use tech
Yeah.
as opposed to the other way around.
right, we should start from problem. And we have one of the largest distribution channel, and we have a bunch of the problem inside of the society beyond Web3, like in a multiple industry, right? Then I'm trying to speak with them and understand the problem, then implement Web3 technology to solve these kind of the problems. So one of the strengths for us is the number of the distribution channel, and we're gonna decide which tech to make, which solution to make, and this kind of stuff backward. So we are pretty much interested in account abstraction, like a DID and a tokenized IP, and these kind of things right now.
So those are fundamental, again, new pieces of infrastructure that you think are required for consumer applications to work.
Yep.
And to that end, my understanding is you have an accelerator program that you've been promoting.
Yeah. Yeah, thank you very much. We just launched a brand a month ago, and we launched a testnet 2 weeks ago, and we announced Sonium Spark, which is the first incubation program. And in 10 days, we got roughly 800 dApps application, which is great. I think we're gonna get thousands of application. So we would like to work with the partners to onboard the developers, and we would like to make the platform which is the very smooth and very very prepared platform for developers. Right now, developer is the most important people.
They certainly seem to be, and I think that's going to keep being a key issue in this space. Mike, your key audience tends to be, I'm going to call it on one side, financial services institutions, some native to crypto, some maybe not, and then eventually your end users are going to be sometimes just everyday traders, professional traders, and yes, institutional traders. You come from traditional finance. Where are we in terms of, well, making enterprise or financial services grade tech in crypto?
Yeah, so the PIP network actually solves this Oracle problem in a very novel way. Using this network of kind of institutions. So basically, if you think about financial market data, it's highly controlled in the traditional world. Bringing that on-chain is going to be a difficult thing to do. And so the network incentivizes institutions that are not typically in the financial market data business to be able to participate. And it's been very successful in attracting some of the biggest firms in the world to contribute their market data to solve this Oracle problem every day with over 500 symbols, updating at 400 millisecond block times. And it's over 100 institutions from banks such as Nomura, all the large trading firms, exchanges such as SIBO. And so from an institutional appreciation perspective, I think that we've gotten a lot farther than you probably would have thought. Because getting everyone over that hurdle of this is something that you should do because solving that problem is a worthwhile one to do, and you're changing the way that market structure fundamentally works. The market data industry is completely being transformed by this innovation. The usage of that across 80 different blockchains includes 400 applications that are generally building in some sort of a DeFi way, and the two biggest use cases are lending or some sort of a derivatives trading. The derivatives trading has come the furthest along. Last year, we were about, as an industry, all derivative trading on chain was around 1% of Binance, Binance obviously being by far the largest in derivatives. This year, we're around 7 to 10%, so it's been an incredibly big volume growth.
And the people who are trading derivatives tend not to necessarily be retail. So we're seeing real institutional adoption, or at least professional trading.
Well, derivatives also does include perpetuals, which is more of a retail product. So I don't want to oversell the institutional side of it. But there are institutions that are certainly lagged in both. But I think we see a lot of the actual adoption coming from more of a retail perspective. And I think that's how we'll continue to see things grow. It's infrastructure coming from traditional firms who are enabling things on blockchains, and then people who either have more of a reason to move on because the trade-offs are important enough for them. Either the security is very difficult to get access to capital markets based on where they live.
So I do want to talk about that. So without going into regulation, only because there's not enough time for us to talk about it, we've heard a lot about RWAs, and I do want to talk about stables. It seems like it's a very, very good use case of RWAs. But are you, in your specific position, seeing that institutions want to tokenize securities and novel financial products, bring them on chain. Are you seeing this?
We are in certain jurisdictions. So for example, in Brazil, there's a huge push to try and put everything into a more advanced way for settling. So they've got something called Drax, and the central bank actually proposes and is a big proponent of this migration and upgrading of technology. I think they'll be one of the leaders in the traditional banking world to at least experiment with this. And then the rest of the world has been mostly focused on getting a treasury product and seeing if there's other appetite to move into more credit products that kind of look like that, because there has been a lot of appetite for the treasury product, and obviously 50 basis points got cut last night. And it's not going to be as exciting as it was 2 days ago. And so, you can start moving up the yield curve, and perhaps that's how we leg into RWAs on chain.
CBDCs. They seem like another thing that can only hit the crypto industry when we've actually reached sufficient scale. What do you think, James? You've been covering it, following this space, I should say, for some time.
Yeah, I mean, CBDC in of itself is an interesting value proposition, because if we have real central bank digital currency, it creates a quandary for commercial bank money and the traditional role of a commercial bank.
By the way, worth noting that in addition to coming from tech, you also come from TradFi.
Sure, yeah. I worked at Citi for a bit. So I think maybe like linking these 2 points, the traditional finance space, whether it's a government, Brazil or the UK or wherever, I think people want the operational efficiencies that crypto, well, Web3 blockchain technology specifically, and the programmability of blockchain can bring. Because the cost of doing cross-border payments, whether that's buying something that is a real-world asset or just doing a payment, is really expensive, like for what it should be. And these costs are there because it's expensive for the incumbent financial institutions to actually do the job. And if we want to actually reach a larger market and service...
You're saying the reason why these costs, it's so priced, is because the costs for financial institutions, which are included in the price, are rather high to begin with.
That's right. That's right. It's incredibly expensive to do reconciliation for payments, and then just the process and paperwork to deal with assets in general is not cheap. And so I think there's a lot of promise in the technology that we're all innovating around that can be directly applied today in traditional finance, where we could actually see real gains right now. But there's inertia, and I would also go so far as to say there's a little bit of confusion amongst certain organizations around, well, what is crypto, and what is zero knowledge, and how does it apply to my business? So coming back to education, I think there's a lot that we can do to continue to bridge that gap. Because if it's always a crypto versus the world kind of mentality, people won't learn, and it will be an in-and-out group-style mentality, and that's not good. And so to get that scale and that wider adoption, it's actually like leaning in to help folks understand how the technology that we've been developing in this space for a while can actually solve that problem.
Interesting. So education is a major hurdle that we have. It's not the tech, it's the storytelling. Soda, would you agree?
Yeah, I do agree. I think regulation is one of the important topic. And generally speaking, regulator does not understand tech, generally speaking. So we have to make the story which is easier for regulators to adapt to Web3. They don't care about tech. They need a story, why they should push this. For example, Japan, right? I'm from Japan, and the Japanese government made Web3 as a national strategy. This is my personal opinion. They made it because we lost in Web2. And what I'm saying is Web3 is the next big opportunity, and we lost in Web2. And Web3 is coming. We should take it. So this kind of the story is pretty much needed for them.
Japan seems pretty progressive, I should mention. Yeah. And of course, the first most famous disaster in Bitcoin history happened in Japan. But it seems like Japan's learned its lesson. And it seems like a lot of your regulators are rather well-versed in crypto. That's not true all over the world.
It depends. When it comes to regulators, there are a lot of positive people, but there are a lot of the negative people. So the technology does not solve the communication issue. I mean, when it comes to regulator, we need to be creative, how to speak and who to speak, and how to make a decision, and so on.
James, what in a very large organization like Google are people talking about crypto? I'm asking just in the internal politics, because if you can't solve within your own company how to communicate about this industry, how are we supposed to go and talk to the general world?
Yeah, so I think within Google Cloud in particular, we're pretty crypto knowledgeable by now. I mean, goes without saying, we're still a traditional technology organization, but of all the technology organizations that are sort of in our sphere, I would go so far as to suggest we're the most Web3 native and knowledgeable. I mean, we're living, running validators. You know, we run a dozen validators for a bunch of different blockchains. We try and keep various blockchain RPC nodes and full nodes running when the networks are struggling. We've lived that pain, and we've been indexing blockchain data for a bunch of years now. And so within our organization, from marketing and PR and engineering and product and all the way up to our leadership, there's good awareness around Web3. Web3 customers are an important customer base for Google Cloud. Digital natives are very important to us. And so our commitment is to stay in the space and stay offering our services.
And you've been, worth noting, Google's been doing this with Web3 for some time. This isn't brand new.
No. We've been indexing blockchain data for like 7 years, which is probably longer than a number of projects here at the event. So.
Like, if I search Ethereum address, I can see the balance of these kind of things, right? Like,
Say again?
If I search Ethereum address on Google, I can see the amount.
So you actually have on Google search some blockchain data surface right within the
some block explorers essentially built
and
right
then
in.
separate to that, for developers on Google Cloud, you can use BigQuery to gain access to a dozen or 20 or so blockchains and looking at the transaction data, logs, receipts.
I'd call this a mark of maturation, right, if you have enterprises like Google doing this. But of course, it's a tech-forward organization. What's it take for tech-backwards companies to get on board? Mike, what do you think?
Yeah.
So tech backwards is
Luddite companies.
It's the kind of the slowest to move.
Yeah.
I hate to draw on so many parallels from the internet, but I think that makes a lot of sense because the initial killer apps of the internet were communication, and I already talked a little bit about shopping, but the kind of the slow movers there who assumed that this was just going to be an additional benefit for some of their distribution or potentially a new channel, they sort of lost. And I think the same thing could happen within our industry. So if I think about DeFi as kind of being a revolution or really a enablement of porting on financial technology to the internet, that's very clarifying in what can eventually be done that can't be done today. So if you can basically divide DeFi into active trading, then passive trading, and you end up unifying things to the point where you've got all this parity, but then you've got all the benefits of blockchains where there's global distribution, frictionless of being able to send anything of transaction, being able to port over your own user name and not be trapped into certain accounts. That enables the design space to totally change, right? There's certain elements of finance that I think are quite broken. If you wanted to become an LP into Sequoia, it's the hardest thing to do. You have to have great connections.
And of course, it's extremely attractive. Who wouldn't want to be an LP?
Who wouldn't want to be? Any of the traditional asset management LP space is highly guarded, and it's full of tremendous amounts of friction. That, to me, looks like something that's ripe for disruption. It seems crazy that there are people that look like asset managers who are on Twitter that sort of monetize based on how many followers they have. They have this trade follow, not necessarily trade follow program, but people are just following them and then giving them the credibility. It would make a lot more sense for Roaring Kitty to actually be an asset manager and have people be allocating money directly to him in some frictionless way. And I think that's what people don't necessarily think about. They think about, yeah, there's asset management. It sort of works for the richest people. If you can imagine a sci-fi world where this is totally frictionless, that actually is a huge unlock. And it looks very similar to the way that the New York Times was the big publisher before. Their first version of the New York Times Online was a PDF of the website, but they weren't necessarily the big winner of it. It was how you can enable so many other people to actually be self-publishers. So that's the thing that excites me the most. Transforming what's possible within the financial market. Of course, it's not fully broken because it works for a lot of people, but
so
if
the
you actually...
user-generated internet, if I'm going to paraphrase you, is kind of that superpower unlock of at least Web 2. Maybe there's a version of that in Web 3. And so actually, I really want to get your take on this, because I think Mike can make a fantastic point. We've been talking mostly in the last 15 or 12 minutes about institutional adoption. What about consumer adoption? What do you think, if we don't have the applications today, are going to be the types of things that are going to draw users to actually use blockchain technology on an everyday basis?
Yeah, it's a still challenging question. But technology is getting mature and mature. What we don't have today is the distribution channel, for sure. And personally, I would like to make, in terms of the use case, right, beyond the payment, I would like to focus on the entertainment.
Entertainment.
Yeah. The reason why is a lot of the people are using blockchain today because they want to make money, financially speaking. But a lot of the entertainment people, they are really passionate about the idol group or, musician, artists, and these kind of things. Very enthusiastic. This enthusiasm beyond technical borders, technical hurdle.
So wait, so is it like, is this a chicken and the egg problem? That is to say, is distribution going to solve this issue? I mean, are the applications good enough that if they're distributed, people are going to use them?
I don't think so, but we are still in a Web3 market, right? We needed to go beyond the Web3, and I think entertainment is the one of the best industry to enter as a first step. But we definitely needed to improve the customer experience, right? Because they don't understand the Ethereum address, Solana address. They cannot manage private key. Then how can we abstract the experience? Like through account abstraction, through maybe chain abstraction, maybe DID, and these kind of things.
Yes.
Just offer a quick +1 on some of that. I think how many even DeFi users and certain centralized exchange users on blockchain are using it because there's an element of decentralization involved? I would suggest there are lots of people, especially in this conference, that do care about decentralization. But I would suggest there's more people that just like the fact that they can get access to an asset quickly and easily, and the fact that there's...
How dare you say such a thing?
Yeah, right? And so that's the Napster moment, right? Yeah. People were downloading MP3s not because they were trying to break the law or anything, it's because it was a great experience. And so whilst there are elements of complexity involved, it's that frictionless ability to just get going by yourself and not rely on anyone else. And there's something there. And so when we are talking about consumer adoption, it has to be something that hides the technical complexity of the blockchain, right? We don't think about TCP/IP when we're browsing the internet. It's completely hidden from us. We just have a great experience. And so the sooner we can get to a point where the user doesn't need to know about that, we're not selling the technology for the sake of technology.
Yeah. One thing I would like to say is, let's say ChatGPT, everybody is using, right? But GTP itself was invented in 2018, right? But ChatGPT was published in 2023. And the big things is...
For GPT-3, yeah.
Yeah, ChatGPT everybody can use ChatGPT without understanding GTP technology itself. So technology itself does not make adoption. We have to deliver technology with great UI, UX, customer, as with maybe Google and this kind of the distribution channel too.
Mike, would you agree? I mean, let me say this. I think we have some, not semi-skeptics, but people who are very pragmatic on stage here. But there's a lot of people in this audience who are true believers, who think that maybe simple people need to know more about the merits of decentralization. Where do you stand?
Yeah, I think that it depends on where you're based, right? So if you're in the developed world, you've got a pretty good access to capital markets. If you're not moving around, your average workflow doesn't get interrupted all that much. If you're living in a world where you don't have great access to capital markets, for sure there's a higher need, and so you're willing to put up with a little bit more. So, if you think about the development of cell phones, in the US you never needed them in the 90s because you had great payphone lines everywhere. but in Scandinavia, you couldn't put phone lines across the country because it was just too mountainous and the population density is too low. And so like Ericsson and Nokia were the vanguards there. And eventually, it was better than all the payphones or landlines that you had in the US, and of course, they took on the technology. I think the same thing happens, where it's where the need is the most that you end up seeing the biggest jump in terms of usage, and then once people realize that it's actually better than what they're using, even though what they were using was pretty good, then we start to see. So I think there are areas where the need is quite significant now.
Well, then, let's talk about what those needs might be. That is to say, what use case that's not already, let's call it, made product market fit, are you bullish on personally? What do you think might be a great use case for crypto? Because it seems, again, we were talking about this backstage, trading and payments are the two killer use cases thus far for crypto. Are there more?
I think those are the biggest use cases and the first time that you're actually going to see some innovation of finance on-chain or on the internet. Like the versions of banking apps that are online today feel a lot like the early versions of publishing on the internet. So I think that we're going to start to see some real breakthrough, and that's what really excites me. So I wouldn't think that we needed to look for 100 different other types of use cases. I think there's a very good one. Obviously, the market's huge for it, and it's ripe for disruption.
James, what do you think?
Yeah,
Killer
I
use
agree.
case.
I'm maybe even narrow that list of 2 down to 1. I do love the innovation of DeFi, but I get a little bit jaded when we're trading things that I don't believe have value, and it's sort of like crypto for crypto. It's like this. It's like echo chamber of we've built DeFi to trade DeFi tokens, and it's just like round and round. I'd love to see DeFi being applied to real-world assets, for example. That would like take that further for me. I think that would be a really nice addition. But then cross-border payments to make it cheaper in developing economies, to be able to send money around and literally enable commerce where it wasn't possible before because payments were too expensive. You know, if you can pay someone 9 cents regularly, and that means something in that economy, but in the US it doesn't, that's a huge unlock.
Or for micropayments, I might argue, right?
Yeah.
Which are simply not viable through traditional rails.
Yes, and I'm very bullish on that. And that's, you know, I'm an optimistic skeptic in so much that I want to see more, especially in those areas just described, but I get a little bit kind of frustrated when I'm hearing things that I just don't see real like depth to the idea.
So I heard from you entertainment, but if you had to kind of narrow it down, what are you most excited about and you think could be a killer use case for crypto?
Yeah, obviously finance is great, but I would like to make the use case beyond the finance, right? Mainly empowering the people, especially creators. I personally pretty much interested in a token IP registration platform. So everybody can register the IP on chain, and based on the usage, based on the the loyalty, this will be distributed on chain.
So earnings go pro rata to people who are using, making use of IP or creating IP in the first place.
Yeah, to unleash creator and creativity.
Love that concept. Gentlemen, thank you so much for having this conversation with me. I feel confident that we are almost there when it comes to scaling crypto. Thanks again.